Hello, beautiful people. Today I am going to show you a quick way to identify divergence. So without further ado, let's go ahead and get it started. So what exactly is divergence? Well, let's look it up real quick. So when you go to Google, you type in divergence, and here are some basic definitions of it. Pretty much when the price is moving in opposite direction of the indicator, that can let you know that the current price on the market is weakening, which may be an indication that it's time to buy or sell. So when it comes to divergence, there are three different types of a divergence. So let me go ahead and pull up an illustration for you real quick. And so here is a very good example of a nice cheat sheet, which the blue is your current market and the red will be your indicator. And so the one we're going to go over today is just regular divergence. To me, they are all the same. However, with some slight variations, as you can see with the hidden divergence, you still have the market ultimately going in the opposite direction of the indicator, but notice how it's a higher high instead of a lower high on this indicator right here. And the same goes with the exaggerated. The only difference is you have a double top on the actual market or a double bottom, and then the indicator is going in a diagonal or a downward or uptrend motion. So we're going to hop on AU on the 4-hour time frame. I'm going to go ahead and put this market in replay mode, and we're going to just pull it back somewhere. Stop right here and see what we got going on. So all right, so we're here current market, and you're probably wondering, well, what's going on? Well, we could look for some buy opportunities here possibly, or wait for the market to come back up for the sell. I like the sell better. So what I'm going to do is go ahead and plot my right shoulder for the head and shoulder pattern. And for those who do not know this simple strategy, it's simply identifying the right shoulder and taking that sell right at that area. Now it had already given us the right shoulder right here, so I'm looking for it to possibly retest here and then sell down. We'll see if this works out or not. We are also in a demand zone right here. This was the last selling candle that pushed the market up to break this structure. So if you were looking to buy up, go ahead and mark up this zone here. Okay. And the way you would identify your divergence in this scenario, I think this was actually perfect. Let's go ahead and go to the 1-hour time frame. So I'm in the zone, and as you can see, this market had been going downtrend, bunch of sellers in the market, and right now we're just waiting for confirmation that this market is ready to buy up. And so with the RSI indicator here, I go to indicators on TradingView, and I just go to the regular RSI, relative strength index indicator right here. And I accidentally put both of them on here. My my settings for this is 70-30, nothing too special. Go ahead and pull up the settings for you. I can't get it. Here we go. So 14-14, and then my style 70-30, only because it's a slope. It's a regular pair. It's not as aggressive. If you're trading aggressive pairs, you might want to try 80-20 settings. Back test, make sure it works for you. All right, let's go ahead and jump back right into it. So sellers are in the market. We're in a demand zone, possibly looking for the market to buy back up to this area where we had already gotten the right shoulder. So what I would do, my method is I would do a little trend line here and connect from where the market would have touched up that point, that trend line. It's so steep, so sometimes it can be a little difficult. But if you had 2 points, like right there, or let's go ahead and move it a little bit further forward to see if it'll give us a little bit more of a horizontal. Okay, there we go. So we got a little bit more of a swing point, which makes it a lot easier. So let's go ahead and move this one here. All right, so say I wanted to start from this last counter right here and just bring it across here before all of this happened. So right here, we're in our demand zone. I'm starting to see that this market has made a swing point below and it didn't go below lower than this. So I want to confirm that the buyers are ready to buy out, or the market is ready to buy up. I'll go ahead and draw my trend line here from the most recent high to current market. And then what I'll do is I'll go down to I'll drop two lines. Typically, I like to do it from where the market touches the trend line. So from here to here, I am analyzing this area to see if I can identify divergence. And so let me go ahead and pull up the indicator here, because what I'm going to do is also drop a horizontal line in the indicator as well. And so as you can see right now, as I analyze between these two green vertical lines, I notice that the market is moving in the same manner as I noticed that the indicator is moving in the same direction as the market. And so that tells me that the market isn't ready to reverse just yet. The moment the market starts to go in the opposite direction of the trend line, so right here, this is when you notice that the trend is weakening. Okay, so that's your confirmation there. And if you have whatever additional confirmation on top of that, it's not a one all entry type of thing. You also want to use confluence. So I have divergence. It is still below the 50, which is mean that if it's below, it's oversold. So you want to buy cheap, sell high, right? Right, and vice versa if you were looking to sell the market. So I have that as a good confirmation, a good area. Like, okay, this is a good deal to buy. And so for me, I like to take my entries on the bullish engulfing candle, which I have right here. So I have my bullish engulfing, and typically what I would do is once I get my bullish engulfing candle plus my rally, which is also good, extra confirmation, you can go ahead and set your limit order right here to take the buy up. Or to be on the safer side, wait till you get out the danger zone, which is the area where this market could possibly break this demand zone, continue down, which is the last swing point. Wait till they get out of this zone, and then you can go ahead and take your buy up to the next area. And so as you see, this market came back down, gave you the retest, and then let's go ahead and move you forward a lot faster, and eventually continued up and took off, and that's it. So we got the buy here. We would do the same thing as we analyze each area. I just don't drop in the market. As you can see in this area, it did violate the right shoulder. That's another thing we'll talk about in another video, getting that fresh money instead of old money. If the market has been there once already, like this is your one time, be careful when taking that second entry. But other than that, y'all, I hope I've answered your questions on divergence, how I identify it using the RSI indicator. Super duper simple. I love using the vertical line so I can just focus on that area, or where I need to see when the market is starting to weaken and, go against what the actual market is doing. So stay tuned to the next one. Thank you for joining me, and have a blessed day. Take care.